Hello and welcome to this episode of Own the Journey. Today I am here with Mr. John Everett, who is the CEO of Legacy Bank and Trust here in Springfield, and it's an honor to have you. Thanks for being with us.
I appreciate it. Thank you very much, Tom. I appreciate it.
Absolutely. So John, over the years, there's been lots of challenges in the banking industry, and you guys have stood apart from many in the industry as a fast growth, a community bank, being involved in the community itself. Talk to us a little bit about how you guys are different, your history, and what you've been able to bring to the team.
Yeah, sure. I'd worked in community banks my whole life, small regional stuff, startup banks. And when I joined the organization, you know, it was just pre-downturn. You could do nothing wrong, everything works. And then the downturn hits and you're scrambling a little bit. All banks did, trying to get through it, navigating it, not just as a bank, but with your customers.
Right.
And so coming out of the downturn, we, as a management team, assessed where we were and what we wanted to be, and started to figure out here are maybe some niches. Instead of trying to be everything to everyone, which was what we were trying before, we finally decided we're going to be really good at what we're good at and focus in on some niches. And really, the interesting thing about banking, unlike a lot of other industries, our financials are public. I can look and see what my competition's doing and how they're doing it. We're all heavily regulated. We're probably one of the most regulated industries there are. But there's different ways to do banking. And we looked at some of the most successful banks around and realized, can we do that? Okay, if we can, let's go after it. If we can't, let's not. And we really started to refine down who we are, what we're good at, and it took years to get there.
Right.
But once we got there, we really feel like we know what we do and we know what we're good at, and we focused on those things, and it's led to our growth. And
really, so what you're describing is getting narrowed in on a target customer profile where you can be best of breed in what you do.
Exactly. I mean, and I tell some of our employees even to this day, some people that maybe joined the organization, we're not commerce. I mean, we can't be commerce. If I was going to be, commerce is commerce and they're great at it. And I can't do that. So let's do what we do and do it really, really well. And there may be an element of what they do, or an element of what our competition does. I just can't do all of that. And that's what's really, once we got focused in on that and knowing what we can and can't do, it's just led to a path that I didn't probably see possible, 7, 8, 9 years ago.
Well, and you guys have grown, probably outpaced the industry by 2 or 3 or 4 times because of that. So talk to us, what is your target customer? I mean, what is it that you guys do that's unique?
We really focused in on, first of all, just small businesses and the owners of those small businesses. I think that's first and foremost. And when we say small business, maybe a business that employs 20 people or less, or something in that vein. We felt like that was a gap that was missing, that was a gap that most large and regional banks, that maybe didn't fit their loan profile. Maybe it wasn't a big enough loan for them, but it was perfect for us.
Right.
And normally a small business owner values that relationship.
Absolutely.
They're not out there just worried about what my rate is. I mean, we kind of feel like we're one of their financial partners, a banker, a lawyer, an accountant. If you can line those 3 pieces up as a business owner, then you're in a good spot. And so we always recommend those relationships, and we value that counseling relationship. So we knew that's our best market to go after. That's who we really needed to attract. And we started there, and then in so being, we also developed a niche in our community development lending. We are what's called a CDFI, a community development financial institution. There's roughly 140 banks out of nearly 5,000 banks in the country that are a CDFI. And that's just a little bit of a niche that's got us into some different markets and some different arenas that really no one else in this area can offer. And we just decided, okay, that's our niche, that's one of our niches, and we're going to go after it. So really the small businesses in that arena is we've really built where we think is our strongest base.
Well, and I think one of the big challenges that all small businesses have when they identify that they want to go after a niche or that target customer is getting everybody on the same team. We were just talking about how that's not always easy for you all. What did you go through to make sure that everybody was on the same page?
Communication's always key, and we joke about it and we laugh about it. As open as I am and our management team is, I think your employees always feel like you're not telling them something. There's still something you're not telling me. And yet we've really just, in our culture is very relaxed. It's very easy. I'm a pretty hands-off manager, and that's, I think, permeated through the institution, that I will go hire my people and give, if I trust you, which if I'm hiring you, I trust you,
right, and
to go do your job, and I'm going to stay out of your way. If you need me as a resource, I'll be here, but I need you just to do your job, and I'm going to stay out of your way. And I think that trust, then building that up, not only for me and them, but in them back to me, is knowing that I'm being honest with you, and I'm communicating directly to you of what I see our vision being. And the great thing is, I'm wrong a lot. I mean, I am wrong a lot. But I have the ability, and our team does too, to take ground up advice of like, this isn't working, or I need this resource, or we need this product, or we need to go this area. And 9 times out of 10, they're right. I mean, and what my job is to help them make that happen. And so I think it's just that trust we built up in the organization as we have found that niche and found that thing in constant communication. I mean, they want, you know, I'm a little, you know, I'm a Gen Xer. I'm maybe a little bit more of a, and I definitely was raised by, you know, the greatest generation parents, and you know, I don't need all the pat on the back and the hand holding, but I have realized maybe other generations and other people just want that and need that.
Right.
And I've tried to be better in that area of getting out on the ground floor and communicating and being accessible to anyone inside the organization. Can come directly to me, and if they have a question, I'll be flat honest with them of what we're trying to accomplish, why we're trying to accomplish it, and help ease it. Sometimes it's just hand-to-hand ground battle, one person at a time.
Yeah.
You know, to get the buy-in.
I understand. I've always admired your humble approach to leadership. You're a phenomenal leader, but you're a very humble guy, and you've surrounded yourself with a lot of very talented people, and you're always quick to give them the praise and the recognition, the accolades for some of the great successes. But I know that you've had a lot to do with bringing that culture into the organization and hiring right, and that's demonstrated in the culture that you guys have developed, because your people love what they do, they love where they do it, and that goes all the way through to your customers.
Well, I appreciate you saying that. I mean, it is truly, I was lucky enough to be ground floor when the bank got going. It was $45 million in assets when I started there 17 years ago. Now we're $720 million in assets now, and you know and at the time when I was there, I was wearing a lot of different hats and doing a lot of different roles. Mm-hmm. And I will tell you that every single person we've hired and since then is a better CFO than I ever was, a better COO than I ever was. I mean, I've been fortunate enough to build talent that is really, really good. And if I have a strength, it's just identifying talent and then rewarding them, retaining them, and letting them do their job. And like I said, I've been wrong. I've been wrong before too, and I'll be wrong again. But it's just admitting that when you're wrong, fix it and go on.
Yeah.
So
That's fantastic. Well, let's shift gears just a little bit, because with COVID and with all the changes in the world of banking, technology has had a big impact in your arena. You guys have had to bob and weave and adjust. Talk to us a little bit about how you've had to embrace that when that's not your go-to naturally.
Yeah. It was it's kind of interesting that being as heavily regulated as we are, we had to have a pandemic preparedness response plan. We had to have the regulators require us to have all these plans, and ironically enough, the fall before, an examiner had joked to us, or not joked to us, but recommended to us that we had not ever tested our pandemic plan. Mm-hmm. And I must admit, under my breath, was like, well, that's never going to happen. I mean, another instance of being wrong.
Yeah.
And so, of course, we had plans, but in March, March 13th or whatever date it was, when it felt like the world was starting to collapse in there, I mean, I didn't necessarily go back and read word for word the plan, but I knew what we needed to do. Right. And we instantly jumped in and started implementing work from home and all that stuff, and thankfully we had all those capabilities ready to go.
Right.
We'd never tested it, we never really tried it, and it was go and do it, and as all businesses did.
Right.
I do think we were better prepared and ready than most, because we did at least have enough framework and idea of where we're going to go if such a thing would happen. But obviously, it's put a much bigger emphasis on our technology and where we're going, and we've gone to areas where maybe I didn't think we were quite ready for or what to do, And we're still not there in a lot of other areas either. I mean, there are still things we have not invested in technology-wise, maybe just because I don't know if our customer base is just ready for it.
Sure.
Maybe just because I don't want to be the first one dipping my toe in the pool, whatever that might be. We're still, you know, we're measured on where we go on that because, as I said earlier, some of our biggest strengths is just hand-to-hand, face-to-face, you know, activities, and we still focus so much on that arena. But it has certainly, and I think where we're going, and probably what you'll ask me with fintechs and the rest of that, and how banking is changing.
Exactly.
I mean, it is so different. In being a kid that grew up in Springfield, I can remember the Boatman's location on East Sunshine by Lone Pine, just down the road here. That on a Friday night, 6 lanes, 5 cars deep. I mean, consistently for hours, everybody going to deposit their paycheck on a Friday, get some cash, do that stuff. That never happens, I mean, anymore.
Right.
I mean, we built a brand new location here in town, and we put in 2 drive-through lanes, and one of them's got the ATM in it, and it's so rare to go to your bank anymore. And how forward-facing and how much more mobile is a part of banking, and how much longer do we have checks? How much longer do we have cash? How much longer before crypto is more accepted? I mean, it's things that we talk about and we're ready for or preparing for, but I may not be the first one in the arena, but it's certainly coming.
Yeah, so how do you differentiate yourself amongst all the noise with fintech and interest rates and online this and online that?
Yeah.
Is it go all the way back to just maintaining those relationships, or is it more than that?
You know, for us it does, but that's, I mean, in the world of, I mean, there's so much competition in banking anymore, and particularly, and I mean, I see it with my own kids. I mean, if it wasn't for me, I don't know if they go to the bank. And as I talk about, the older generation now is still very much, hey, I want to walk in, I want to be there, I want to talk to that teller, I want to talk to this person. And it's very weird to continue the bank that side, which is some of my best depositors. I mean, let's face it, the older generation is your better depositors, the younger generation is your better borrowers, for the most part. And all of a sudden, okay, my better borrowers that maybe don't have a lot of cash right now because they're still young, who don't want to come in and want to do everything on their phone, when they start to transition to be my better savers, my better depositors, because that's the game we play. I mean, the game we play is bringing as many deposits as we can so I can loan it out the door. And I've got to work 2 customer bases, and we're probably a little more active and hyper now to do, whether it's online account opening or online loan stuff, and really targeting that towards the younger generation, while then not doing that towards my older generation, because it does not sell. I mean, we've tried online account opening for seniors and stuff like that. Does not happen. And it's just, we're playing that game of being patient to wait on implementing some of this technology until these 2 lines probably cross a little bit.
So know your customer.
Yeah, exactly. That's exactly it.
Yeah, very, very good. I love it. Well, when it comes to knowing your customer, you guys have done one of the things that so many banks are not doing right now, and that is you've invested in this new state-of-the-art, unbelievable facility to make sure not only that your customers know that you're there, that you're a part of the community, but to create a great work environment. How are you guys balancing the work from home with the great place to work and all those kind of things in the midst of an industry that has historically not embraced that so much?
That's the thing. We may not have been COVID politically correct. You know, that we stayed in the office nearly the whole time. We did, when it initially happened, when COVID initially hit, we certainly sent a lot of people at home. I wanted my wire team broken up. I wanted my loan processing team broken up. I wanted my, you know, particularly a lot of my operations teams broken up, because I couldn't afford for my whole team that sends out wires or receives wires to all get sick and be out.
Right.
And so we certainly kind of tried to break that up, that we knew our operations couldn't be interrupted and work from home. Probably, I don't know, within 6 months of maybe when it started, by last fall, I think we had everyone pretty well back in the office, separated, socially distanced as much as we could. But we have a group of people that thrive on the relationship. I mean, we have several people who actually work for us across the state. They've never worked in our office. We just went and found talent that maybe worked in, you know, outside of St. Louis, or lived outside of St. Louis, or lived somewhere in central Missouri that we knew about, and they've always worked remotely. And that's been something new. That started since the pandemic started. We did not have any remote workers until then. And it's worked well for us, but I would tell you 95% of our employees are in the office every single day, thriving off that constant communication and feedback. And it works better for us that way. I know certain other industries don't, but that works better for us.
That's outstanding. So when you break down the way that your operations work, I know that you've got multiple locations and you're trying to constantly bring the culture together. Talk to us a little bit about how you're managing multiple locations.
One of the toughest things, and we're by no means expert on it. That was an advantage of building our new office. We never had a central office. We never really had a main facility. We'd cabbage people in various locations. We had 5 locations currently. We had 7 earlier this year, and we've closed a couple down, just consolidating things around.
Sure.
But we had teams different places, and oftentimes they were teammates that would never see each other because they were 30 miles apart or 40 miles apart. We pulled all that in. When we opened our new office, I think I counted, we've kind of consolidated 5 different offices. I mean, lease spaces, rental spaces that we were just growing so fast. We just pick another space until we could finally put them together. So that took even a couple months to get used to all of a sudden having everyone there. I wasn't used to it, I mean, to get around. But we definitely, each location has a culture. I mean, even though we have one main corporate culture, I can tell you when I go to a different location, it feels different. And we're working so hard to not, for it to feel the exact same. And one thing we've done just recently is, I don't know, 7, 8 years ago, we really defined our culture, who we are, what we were. And that was who we were at 7 years ago. That's not who we are now. And so we went back through a big exercise this year of redefining our culture, and all the employees, when we hire, we talk as much about culture as we talk about your history or what you've done. When we bring someone in, we indulge them back into a culture class again, and this is who we are and what we are, and starting to spread, and wherever you work for us, you will come in and be part of this culture class of who we are and what we're about. And we tell everybody there's nothing wrong if you don't fit our culture. That's not saying you're a bad person or wrong person. It just means you're probably not right for us, and that's okay. I mean, there's just some people that just don't maybe buy into what we're about, and that's fine. I get it. I mean, but if you're not, you'll stick out. I mean, and I'll probably get too off topic and bring in religion here, which religion and politics don't talk about. I grew up Catholic, and I kind of joked to some of my staff. It's a little bit like a Catholic wedding that I can tell who's Catholic and who's not. I mean, you know when to kneel, you know when to stand, I mean, we've got it in our head. I mean, you hear the line, kneel. I mean, and I joke about that if you don't fit into our culture, we may be all kneeling and you're standing, and it's obvious you don't fit in. And that's kind of my joke with them and we really, I mean, it has been, that's what's really helped us probably take off, is getting everyone feeling it, everyone buying into what we're doing, enjoying our successes, recognizing our weaknesses, what we have to work on, and no finger pointing, no blame game. I mean, let's just fix it and go on.
Nice. Well, we hear it over and over and over that the culture kills strategy. That it'll beat it every time, eats it for breakfast. You've heard all the things, but you guys have obviously managed to pull it off. So
yeah, it's a great combination of both. I don't know which came first. I don't know if the strategy came first and then the culture built around it, or if the culture did there and that's where the strategy went. But you can't have one without the other. I mean, there's just no way. I mean, and we talked about that earlier too. I mean, our strategic planning is a very serious event. It's a very serious thing that we focus on, and we as a management team meet weekly of where we're at on different projects, where we're going, and when new ideas come up, the strategic planning is right there in front of everybody.
Right.
Does this fit our strategic plan? Is this what we said we'd do? And if it's not, do we go into it, or we say, no, that we said we wouldn't, we said we're going to be here and we can refine it down, but it's a weekly exercise for us to check the boxes and make sure we're accomplishing everything we said we wanted to accomplish as a management team, as a board of directors, annually, where we want to be.
Well, I think that's one of the big challenges that lots of small business owners have, is they try to do too much, and it's the art of saying no, which is really hard. It's been hard for us for years and years and years, but it sounds like that's something that you guys have really built into your DNA eventually.
And it helps, and I mean, you've certainly been there, and for us, in this last some odd years, once you have success, once you finally achieve some of the goals. We laid some goals out that took us just years to hit.
Yes.
And it kind of, I mean, the old proverbial, the hardest million that makes your first million and then you go. It was so hard for us to get to that first huge goal we had. And then once we did it, I mean, it was, a couple high fives, whatever, now let's go. What's the next one?
Yeah.
And once we kind of knew what we were and who we were about, we've started knocking them down at much faster paces than it took to get some of the very first milestones we set it literally took us years to hit. I mean, and it's just been one of that strategic planning, that culture, that management team, and then, of course, the obvious one. Once we had financial success, then I could start going out and getting more and more talent, and it could afford more talent, and then that just certainly snowballed on itself. On once you start to get some really key people to jump over, it's accelerated at a pace, that we're getting calls from people that I wouldn't have answered my calls some odd years ago, and now seeing what we're doing. So
that's awesome. Well, I mean, I heard a couple of things, strategic planning and culture being kind of the first and foremost, but not being afraid of letting people go on to another time of their life if they don't fit the culture, but honoring them on the way out, because it's not a bad thing if they don't fit.
No.
I think that's really a big challenge. What, since you focus on so many small businesses and you've seen so many come and go, what comes to mind as the challenges or the mistakes that so many small businesses make, that some advice that you would give to other small business owners that are trying to get started?
I mean, maybe it's the banker in me, so I mean, I apologize in that. The number one we see a lot is being undercapitalized or being under cash, and going to add on to a new line of business, going to sit there and say, hey, I'm doing good at this, but there's an opportunity I see out there, and I'm going to jump over in this opportunity, and I need to inject a lot of cash or potentially borrow. And the other thing, I mean, it's one that we've never seen a projection that says it's not going to work. Anytime anyone brings me a projection, shockingly, it always works. It always works. And it's like, that may not be true.
Yeah.
But what we see is a lot of times of that, look, maybe I've got an idea and I don't have what we would say enough skin in the game or enough cash into it, and they leverage themselves a little too much. They leave themselves cash poor. I mean, cash truly is king, and that bad times will happen.
Yeah.
We were ready for bad times to happen, last March. I didn't think it'd be a pandemic, but we had been on a run of 10 years of economic recovery and growth. Statistically, had never happened in the history of the United States. The longest recovery and growth period ever. It had to happen.
Right.
Never thought it would happen that way, but we were so ready, prepared for it. And again, now I'm starting to feel that way again. I mean, I'm getting myself nervous. And the other joke we make, and one that, I mean, is that, some odd years ago when we joked about being in a family party, that if your grandmother came up and said, hey, I got an idea, I'm going to build a spec house, everybody's doing it, and I can build a spec house that'll sell. It's like, now we're kind of joking about, if grandma wants to do a VRBO or, do all stuff, I mean, or, it's just, I mean, it's kind of one of those like, hey, that's maybe too late. That's maybe a little overdone. And we're seeing that again of just the real estate market has worked so well for this period. I mean, obviously, huge growth in real estate values. Timing now, not great. I mean, it's up 20% a year, and we see people wanting to dive into it, and it's like, you missed it. I mean, and it's okay you missed it. I mean, I missed it. I didn't do it.
Yeah.
And that's what we see. It's just a little bit sometimes of either people miss it and they come in at the last minute, because everybody else, I've heard everybody else makes money, so I can too.
Right.
No, you can't. I mean, no, that's not how it works. Or B, that they have a dream, they have an idea, they're not properly leveraged, and all of a sudden a lull hits and you can't survive it because you don't have the cash reserves to get through it. Yeah. Those are the two things we see so much.
It was an early lesson for us. I describe it inside of our company as that we have to have safety in the business. That profits inside the company aren't a bad thing, because there's this like negative connotation that businesses are evil and all this. It's like, no. If the business is run well, then it serves the team, and the team still has a job in the time of hard times, and that's safety in the business. What do you think is the right number? I mean, in our business, we want 4 months worth of operating capital. I'm trying to build towards a year, because I feel like I need to have more runway the bigger that we get. What do you think's right?
Yeah, and I think it varies by industry, and that's because I was, as you're saying that, I was trying to think of what my proper number is, and sometimes it just varies by industry. It varies by cash flow. I mean, I would say, imagine, in your line of business, they're very repetitive cash flows, pretty consistent. You'll lose clients in and out, or you'll gain new clients, but it's a probably pretty consistent, probably monthly cash flow.
Right.
So I'd say 4 months is good. We have other industries that very cyclical. And that they have their summer peak season, or maybe their winter peak season, or whatever it would be, or I'd have more, and clearly. Or you have ones that are very dependent on a few large clients, and which scares us.
Sure.
That you lose that one relationship, there went so much cash flow. You better have more reserves. I mean,
right.
So it really does vary by industry and what you're doing, and varies by leverage ratios too. Because I mean we take plenty of people up to a fairly high leverage ratio, but the ones that have lower and bad times hit, well, you can borrow again. I mean, you can get through it, and we worry about that for so many customers that, hey, this may be the last loan we can make. We're going to leverage you as much as we can. Is this what you want your silver bullet for? I mean, or do you want to wait until bad times, knowing, hey, we'll be there for you, and we've got some room or some equity in something that we can deal with.
Right.
So I mean, so really, like I said, I think it varies by situation, varies by customer, what they're at. But I would tell you anywhere from 3 months to a year. I mean, we see new businesses that we'd love to see have, at least 2 to 3 months of cash flow on hand for a new startup business. That's kind of an old SBA rule that you got to have that, in reserves to open, because let's count on not having any cash flow for a couple months.
So one of the gifts that I just took out of everything that you said was it's vital to have the banking relationship before you need it.
Well, yeah, that's 100%. I mean, that's 100%. I think
it seems like a lot of people don't do that, though. They come in the emergency, or they come in the new idea, but they haven't established that relationship.
Yeah, if you don't have, and that's the thing, if you're a small business owner, I would highly recommend to have that relationship with your banker, and they understand what you do and how you do it. And maybe you're not a big borrower, but let them know who you are and what you do, because maybe you're just deposit only, but you may need that relationship. And honestly, PPP, I mean, I hate to say it, and don't take this out of context, was the best thing that happened to us. It was, I mean, by far the best thing that happened to us, because we were picking up our phones, we were filing PPP, applications last April, or whatever the date was. It was April when the program opened. And my phone was blowing up from people that knew me but didn't have a relationship with the bank, and their bank wasn't returning their calls or wasn't filing their PPP application. And we gathered so many new relationships. I would tell you that's a huge part of our growth, was from people that all of a sudden valued that relationship. I mean, they may not have banked with me because we were a quarter point higher in a rate, or maybe didn't pay quite as much in deposit rate, and they went someplace else to get the cheapest or whatever it would be. Well, then you got that service to go with it too. I mean, and I may not be the cheapest. Sometimes I am, and sometimes I'm not. We hope we're always very, very close. It just it just depends on the moment. But the relationship thing of, hey, we'll be there for you. And I mean, and we had so many just panicked business owners wondering, my business is going to shut down. I've got nothing. I want to take care of my employees.
Sure.
And we were there, and maybe their current relationship wasn't. And I mean, it was probably some of the most rewarding times for me as a banker to know. I mean, the genuineness of the thank yous and what we've done was huge. I mean, it was.
Well, you guys did it for us. I mean, we were eternally grateful. I mean, you turned it around in the shortest period of time of anybody I'd ever talked to, still to this day.
Well, and that's, I mean, and we definitely appreciate the relationship a ton. I mean, we truly love doing it. I mean, I had my staff, I mean, middle of the night doing it to Saturdays, Sundays, whatever. I mean, it was all hands on deck making it happen.
Yep.
And I mean, because we want to be there for our customers. We had the opportunity, and we knew we're going to build relationships through this thing, and relationships that will last for years. And it's been the case. I mean, it really has been the case for us that we picked up. Since the pandemic hit, we've far more than doubled in size.
Wow.
I mean, it's in a year. I mean, it took 17 years to get to that number, and then we doubled it. Well, it took 16 years to get to that number, and we doubled it in a year.
Wow.
I mean, so that to me was one of the biggest things.
That's awesome. So no, it's impossible to predict the future, but I'm gonna ask you anyway, just a little bit. As you're looking out over the horizon, you see some of the challenges, some of the things that you guys are worried about. What advice would you give small, medium-sized business owners? Do you see growth, bull or bear? Are you seeing tougher times? Are you asking people to be create a little more safety in the business? What are you guys forecasting?
I'll start with, I am the eternal pessimist. I mean, my dad was a banker, I'm a banker, so I mean, so you've got, I have no guts. I mean, if I had guts, I'd be an entrepreneur. So I have none. So I will tell you, I think too many things are boiling to a front right now that will lead to a recession. I just think we're certainly staring at inflation. I've been at a meeting where the Fed Governor Esther George out of Kansas City said, and she made the comment of, how long can you call inflation like this transitory? I mean, transitory is a short period of time, and we've been now saying transitory for 6 months or longer. Mm-hmm. It stops being transitory anymore. She does have some reasons why she believes maybe pricing will come back. I don't know. Wages aren't coming back.
No.
Wages have gone up, and I don't think I'm going to be able to find people to work for me less than they work for me this year. So that alone, I think, is going to keep driving prices up, inflation up. I think we're going to see housing level off. I don't think we'll see a dip in housing like we saw in the previous recession. Before, we had way too much inventory. Now it's not that we don't have it's too much inventory. We don't have enough, and that, I think, is only getting exacerbated by hard time finding labor, hard time finding supplies. I just really think housing will mellow out, particularly if rates go up. Now all of a sudden you've got the double whammy of, hey, if I'm going to increase my house or move, I'm going to now pay a point higher in rate or a point and a half higher in rate.
Right.
I think that just calms the housing down, allows the inventory to catch back up, and just level prices out on that front. I don't know, consumer spending, I think, will be still fine. I don't think we're going to see. I don't think we're going to see any kind of businesses really ultimately suffer right now just from a true recession downturn. I think there's still plenty of cash in the system. I still think the income, wages are good. We've seen a ton of people retire. Obviously, the economy and the big boom in the market the last year has allowed a lot of people to come out of the workforce and retire, and they have plenty of wealth. And so I just don't think it's going to be a spending issue as much. But I do think it's going to take a little bit on pricing to catch up. Wages haven't caught up to pricing. I mean, even though wages are up, they have not caught up to pricing yet, which is, I just think it's going to just be muted. We'll see what DC is going to do. They're getting close, it sounds like, and getting their package through. Taxes maybe not up as much what's been talked about. I think that's deadly right now in a cooling recession to raise taxes. I think it'll be fairly muted. So I mean, I would just tell you, I think we're just see a very calm, quiet period, and I think it's going to just take a little bit for business to adjust on finding labor, a very tight labor force. I think more people will come back into the labor market, and, that now all of a sudden you've burnt through some cash reserves that maybe you got through government stimulus. I think they will come back. I think they're just being a little, maybe choosy picky of, I'm not going to work until I absolutely have to.
Right.
And that's going to happen sooner than later. And I think that calms everything down a little bit. But it's a very tough time. And the thing we've seen, and I know you've seen it in your world. I mean, when the pandemic hit, there were some big haves and have-nots. I mean, there were some that took off and had their best years ever, and banks were a big part of that. And some that just got killed. I mean, and a lot of the hotels, motels, they got absolutely annihilated through this. And now, has there been a behavior change, and do they ever bounce back to where they were before? I think it's tough. I mean, I really do.
It is gonna be tough.
So it's just, we'll just see as fintech takes over and technology takes over of how these businesses, adjust and move with it.
Yeah.
So, and we're in it too. I mean, I think, the payment system's changing all the time. How payments are processed changes. And I said earlier, where does crypto go? I mean,
I was going to ask you, what do you think? Does the traditional community bank get into the game yet, or maybe one day?
I think there's some that are. We're not there yet. I've been up until probably this summer. I was like, this crypto's just not. I mean, it's only for, you know, paying ransom or whatever. It's not real. And then I kind of finally started diving down of what it's about and how it works, and actually have now seen a practical purpose to it. You know, so, and I think it may not be in my career. I may be, you know, retired and done before it becomes a little more mainstream, but it's certainly one we talk about and we think about, that we're not there yet, but it's going to have a place. And if as an industry, if banks decide, that's stupid, I don't want to do it, you're going to get killed. I mean, because it's going, I believe it's going to happen. It's just win. It's just win and don't not learn about it. Don't not understand what it is, what it's about. Burying your head in the sand and acting like it's, you know, not going to happen, I think, is when you get lapped.
Yeah.
And we just don't want to be there. I don't want to be lapped, but I don't know if I'm going to be the one bringing it.
Jumping in a little conservative.
Yeah.
All right. Well, John, thanks for being with us today.
No.
I can't thank you enough for sharing your wisdom and helping so many small businesses with your ideas and concepts.
I appreciate it, and you said some very nice things about me. I would tell you, the irony is that you're asking me questions, and I want to ask you all the questions because you're way better at running your business in your industry than I am. I mean, you guys have been, I mean, I've loved watching what you've done, how you've done it, how you've grown your company, how thoughtful you are, your innovation. I mean, I learn way more from you, and I'm fortunate, and I appreciate the time today.
Yeah, I appreciate it. Well, cheers to you.
Yeah, absolutely.
Congratulations on owning your journey.
Yeah, thank you. Thank you, sir.